DeFi. Wow. What has been happening this month alone? Some of the biggest exploits, if not the biggest exploits in DeFi history, have unfolded. And I firmly believe that this is all a part of what we all expected was coming down the pipeline. And when it happens, again, it's just kind of like going to happen. And then looking back, you're either going to survive or not. But there's a massive reshuffling taking place right now. Massive reshuffling taking place. And so this is Alex Cutler from Aerodrome Finance, the leading decentralized exchange on Base. And here he went on to predict that there is going to be a massive reshuffling of altcoins over the next consecutive couple of years. So this is just going to set the tone for this portion of today's video.
A lot of this kind of fundamental based investing is returning back to the space. Yep. As you look around, there's more suits here than there are at pretty much just about any conference over the last couple of years. These people want to invest in value. How do you think about this? How do you think about creating value from the Aerodrome perspective? What is the Aerodrome kind of investment thesis here?
Yeah, I mean, I think we're in a transformative moment, right? And I think you saw that at the policy conference. You saw it with the guidance that we just got out of the major regulators. We see it at the cusp, perhaps, of getting clarity. We are moving, I think, from a time where the investment game was, will this shitcoin pump? Will this token with absolutely no fundamentals? Will I be able to get in early enough and get out fast enough to make some money? To a moment where people are actually going to be looking at, and we're going to have a new class of investors, looking at, can I own the best infrastructure of this space? What can I own that's going to accrue value as the space grows by an order of magnitude? What are those mechanisms? What does the token do? What rights does it grant me? And I think as that maturing and new investor class comes in, that's going to cause a massive reshuffling of what's seen as investable assets versus not, because 90% of the top 100 tokens right now by market cap don't redistribute any value whatsoever. Do you really think all the funds, all the suits, walking around us today are going to come on chain and buy a token that's a functional meme coin? No, I think we're going to see a massive reshuffling in the top 100.
And he's not the only one who has that perspective. This is Chris Tyler from Bullish Exchange, which is a regulated, institutionally focused digital asset trading platform. And he mentions the same exact thing, that over the next 5 years, we're going to see this selection process.
Are you going to give authorization for a company to issue a tokenized financial instrument on a brand new L1? Like, I think the answer is candidly no. And so what we're going to see, I think, a convergence around some of the very well established and heavily understood and broadly accepted L1s, and we're going to see I think we'll see a sort of real selection process go on. So I would imagine that we see a lot of L1s become redundant over the next kind of 5 years. I think we've.
So that sets the tone for today's video breakdown. Now, the reason why I'm playing that for you all is because, again, in this evolving landscape, we need not marry biases. And if something shifts, if something changes, if something happens to a protocol that we previously had been operating on, or a digital asset that we really liked and enjoyed, and it just completely wrecks and something completely flips 180, we have to be willing in this evolving landscape to change the bias, to react to market conditions, and to just, I guess, reassessed, right? Rebalance your portfolio, rebalance your mindset as you progress through this digital journey, because not everything that we hold in our portfolio, unfortunately, is going to survive. Now, can we all hope that it does? And do I hope that they all do? Absolutely, 110%. But if they don't, we have to be willing to adjust, move with the changing tides, adapt new research, adapt a new mindset, so on and so forth. So recently, and this is probably the most recent event that I've heard of that I don't know the most about, but I still wanted to put it on everybody's radar. The Rave scandal is getting bigger. 3 major exchanges, Binance, BitGet, and Gates, are officially investigating. Zach XBT called out 3 by name. Alleged insiders used the platform to engineer a massive short squeeze. BitGet CEO Gracie Chen confirmed a probe within the hour. Binance CEO Richard Tang pledged to investigate all market misconduct. Kevin's Lee already on it. User protection comes first. Rave DAO just became crypto's latest case study in a alleged insider manipulation after Rave token crashed 95%, wiping out $6.3 billion in market cap in less than freaking a couple of days, right? So this was huge. I haven't looked too much into this one, but just, again, something to be mindful of and pay attention to. Somebody came over here and put all, this is Zach XBT, put all the freaking timestamps from all the tweets on this price action, which you guys know I love to do. So I'll probably go back and thoroughly look through this, but this was something that just happened. The bigger scandals that are taking place right now that have caught my attention are on these protocols, right? Aave token is now down negative 19% after a $292 million Kelp DAO RS ETH exploit triggered a full-blown liquidity crisis. Aave's ETH pool just hit 100% utilization. That means one thing, that there's almost no ETH left to withdraw. Here's what happened. The attacker drained 116,500 RS ETH, which is 292 million, from Kelp DAO's Layer 0 bridge. He then deposited the stolen RS ETH as collateral on Aave v3 to borrow 236 million in wrapped ETH. And because the RS ETH is now unbacked, those positions are unliquidable. Aave is now stuck with $280 million in bad debt it cannot recover. Panic withdrawals have followed. $5.4 billion in ETH outflows, within Justin Sun pulling 65,000 ETH or $154 million alone. ETH utilization, has maxed out 100%, which means there's almost no ETH left to withdraw. This is the first real test of Aave's umbrella safety module and the biggest DeFi exploit of 2026. This is still a developing story. So that broke. This is just from this rising, 3:05 a.m. I woke up to that. Crazy stuff happening right now. And I said, this is the moment. Some will survive and others won't. Now, I'm not making any allegations. I'm not saying that Aave is not going to survive this, and that. I hope that they recover from this, and I'm sure that they will, and any other project or individuals involved. But nonetheless, I guess just the point that I'm trying to make with touching on the video breakdowns that I started off today's call with is that we are witnessing and are going to witness that reshuffling, whether we like it or not. And so it would just behoove us to pay attention to these things, not marry biases. And again, like I've tried to teach you guys in the trading markets of things, remain adaptive. Over $520 million in stablecoins left ETH in just the last 24 hours alone. So again, just things to consider when you're rebalancing portfolios and taking future projections into account. This is from the Redstone co-founder, right? You guys know I'm a favorite of Redstone. I think honestly, out of the Oracle's choices that you could choose out there, Redstone is probably one of my favorite as both a push and pull Oracle. They do some things better than other oracles, in my personal opinion, except they just have not reached the scale of adoption yet. They are working with some very big institutional partners. This is not to show you guys Red or anything. I just personally hold Red in my portfolio, and I like what they do and how transparent they are in some of the accomplishments that they've had over the past consecutive couple of months/years. But he put this out where he says Kelp DAO exploit came down to one configuration parameter. You got to kind of nerd out to read this, so I will. RS ETH's OFT was deployed with a 1-to-1 DVN security stack, one required verifier with no optionals and no threshold. When the attacker called IZ receive on endpoint v2, that single DVN signed an attestation for a packet that was never admitted on the source chain. With no second verifier, everything downstream executed as intended. Commit verification, IZ receive, peer check, OFT decode, 116,500 RS ETH released on Ethereum. Layer 0 v2 is modular by design. Projects configure their own security stack, choosing how many independent DVNs must verify a message before it executes. A 1-to-1 setup means one signature is enough. A 3-to-5 setup means 3 of 5 independent verifiers must agree. The protocol itself worked as configured. Simply, the configuration was not allowed the best security standards. And that, to me, on Aave, is a red flag, right? Any OFT or OAP with meaningful TVL can check their current setup on layer0scan.com right now. Under the receiver OAP config, the relevant fields are required, DVN counts, on and so forth. All eyes are on Aave and the broader DeFi spillage. So huge things going on in DeFi today, guys and gals. Just waking up to this and being involved in liquidity pools and being involved in yield generation. This was definitely a tentative of me. Here we have that gentleman, the co-founder of Redstone, tell you guys the importance of oracles here, which is why I have oracles in my portfolio. Listen to what he says.
Data in an accurate and secure manner to DeFi protocols such as lending markets, perpetual exchanges, synthetic stablecoins, and many other like primitives. You can think of an oracle as this connectivity tissue between blockchains that are separated, right? Ethereum doesn't talk to Solana, doesn't talk to Avalanche, to Stellar. Oracles is this one piece that delivers the data to all of them to power smart contract execution. So a smart contract is nothing else as a simple if bracket. If something happens, then execute it. So oracles is this input layer to ensure that the whole system is working healthily and without any issues. And the most important aspect to measure an oracle is resilience, accuracy, and robustness. Therefore, with Redstone, we put it as the absolute #1 priority. We've been operating over 5 years without a single hiccup, mispricing event, or downtime, which cannot be said about other competitors in the Oracle space, because this is like the most important vertical for us. And to give you a very practical example, let's look at 28th of February, a couple of weeks ago, when US and Israeli struck in Iran. We saw that the event happened on Saturday when all the trading markets were closed. So where the trading was happening? Hyperliquid. We are an oracle that powers many of the HAP-free markets on Hyperliquid, allowing for the price discovery over the weekend for crude oil, gold, and many of the other commodities. So we are actually the leg that determines when a position should be liquidated, when it's healthy, what should be the funding rate, and how the market should operate throughout these closing hours, so that on Sunday in the evening, when the markets open against CME and all the others, then the market is going back to operational on the global scale. One really important aspect is also the liquidations on lending markets. Even a week ago, we saw on Aave, the largest lending market in the world, unrightful liquidations of $27 million because of an Oracle mispricing event by 2.73% in terms of the funding rate, in terms of the interest rate on particular tokens. So Oracle is the system that no one sees but hears about when something breaks. Therefore, it's a critical part.
Really fabulous answer.
Right. So a critical part of the DeFi infrastructure, a part of the infrastructure that nobody sees until something breaks. And so that's why Redstone and other oracles, that help run DeFi infrastructure have always been a part of my portfolio. And even though the lack of price action has, of course, been insignificant lately, but I still think that they're going to perform relatively well when everything comes on chain and, people wake up and realize that you need oracles. So I thought that perspective was interesting. Flare had some announcements in regard to the situation. I don't really want to get into them, but I've just been so skeptical lately about FSATs and Flare and all this stuff. And this just, to me, I don't know why, it just puts a negative taste in my mouth, even though maybe in the future it doesn't. Whatever, this just is weird, right? I mean, and I know that they're doing it as a precautionary measure, like they mentioned, but it just screams control, right? As a precautionary measure, we are temporarily pausing FXRP cross-networking via OFTs between Flare, Ethereum Base, and other supported networks while RS-ETH incidents are being investigated. users holding FXRP on non-Flare networks cannot currently redeem, I repeat, cannot currently redeem, as redemption requires assets to first bridge back to Flare. FXRP on Flare continues to function normally apart from OFT-based cross-networking, minting, redemption, liquidation, and all other in-network functions on Flare remain operational for now. There is currently no indication of an issue affecting Flare or F assets. We will share further updates as the situation develops. So, I don't know. I don't like seeing it. This is the full breakdown of what it all entails. You guys know that I sold 2 million Flare. I kept 500,000 in case my analysis on it is wrong. So that way I still get to experience some of the price appreciation in case I am. But I sold back before the dump that we saw last year in October, and I got at a pretty decent price before we saw a massive sell-off. So I'm still considering and on the fence about buying back into Flare, or at least as much as I did have. I still have a little bag just in case. And it's all earning yield on Scepter. So it's about 500,000 liquid staked on Scepter. But yeah, outside of that, I lost my taste for Flare a long time ago, as the plans and promises all last year with freaking XRP yield and all this stuff was just taking forever, blah, 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 blah. And there were other opportunities that were a lot more prevalent. Some people like Flare. I'm not a basher or anything like that. I just personally sold a lot of it out of my portfolio. Hold a little bag, like I said, just in case I'm wrong. But, to each his own is what it is. All right. So next, the last hack that took place, Drift, right? The North Korean $285 million heist. I just found an update on this. I thought that this was pretty interesting. Okay. And the reason for this is because in recent years, right, we've seen this regulatory hurdle and battle and this just distaste in everybody's mouth for USDT. And I'm not saying that doesn't still exist. And of course, there's still skepticism. And I'm definitely on the fence of USDT. Just over the years, I've never touched it. I've never used it. And I probably still never will. But I just find this interesting that now they're trying to paint USDT as the knight in shining armor. And so again, I'm just trying to warn everybody that sometimes when things seem too good to be true, it most likely is. So just be careful when we start to see these sentiment shifts. Don't fall into narratives. Don't try to just move things around in your portfolio because of headlines, and really just consider and understand the risk. So this I found interesting. I said here, I've been in crypto for 10 years. 5 years ago, you would have never seen this headline, and it's quote, USDT is the knight in shining armor. This is a massive breakdown. This is the one of the moments where people will look back and realize the narrative completely flipped. For years, Tether was painted as the weak link, the one everyone expected to collapse when pressure hit the system. But now, in a real stress scenario with a protocol like Drift Protocol getting exploited, Tether isn't the one breaking. They are stepping up with a $150 million recovery effort alongside the Solana Foundation and other players to stabilize the situation. That's a massive shift. This is what real market cycles do. They're going to expose who's actually built to survive when liquidity dries up or things go wrong. The companies that step in with capital, structure, and solutions are the ones that are going to end up controlling the next phase of the market, not the ones that hype, the ones that have high balance sheets. What makes this even bigger is the competitive angle. Circle has historically dominated as the trust stablecoin layer in ecosystems like Solana. But now Tether is stepping in not just as a participant, but as a rescuer. That changes perception, and perception in markets is everything. And if you really read between the lines, this isn't about saving a protocol, this is about positioning. Tether is embedding itself deeper into the infrastructure layer of DeFi, becoming the liquidity backbone in moments that matter most. That is how influence is built in this space. In chaos, leaders are revealed. And right now, the companies writing checks and restoring confidence are the ones that will own the next cycle. So I'm not saying that there's some like, oh, trust all of a sudden in USDT, but it just goes unnoticed that as many years in the past as people have thought that USDT is going to go away, they still haven't yet. And I think that that still needs to be taken into consideration. Now, could they in the future? 110%. I'm not here to debate that with anybody because who really truly knows if they are or not? I personally, like I said, don't touch it, never will. I'm always going to be skeptical about something that in the early years of its journey was super skeptical to start with. So for me, I've always just lost trust in it. But it still just goes to show who was actually stepping up, and that cannot be denied. Where people were saying that Circle could have paused these transactions when these wallets on Drift were getting drained, and they didn't. And now, vice versa, you see USDT stepping in as this quote unquote knight in Charmin armor. So it's just interesting having been in crypto in 10 years to see narrative shift. I would have never thought 5 years ago that I would see a headline like this. But now here we are today where it's being painted as the good guy. Whereas a couple years ago, you were seeing Tether painted as the bad guy. And I'm not saying that it's not. I'm just here showing you guys what's happening and what's breaking in the moment. So just listen to what this guy says about what USDT is doing and how they're refunding people that lost money in this hacked event.
You put it quite elegantly. Tether is coming in. They're the knight in shining armor. They're going to put Drift back on its feet. They're leading a $150 million effort in tandem with the Solana Foundation and some other unnamed partners. The general idea, what's been communicated publicly, is that a recovery pool is going to be set up, and all affected users are going to be given a recovery token, which represents their share in that pool. So over the next few years, maybe decades, who knows how long it's going to take, Drift will funnel a substantial portion of their revenue into that recovery pool. And I understand that users who hold the recovery token will be able to redeem liquidity against that. So it almost gamifies the recovery in a way. You can hold your recovery token until the end to get a larger portion, or you can kind of cash out as quickly as you want. That's how it seems to be taking shape. I don't know that for sure, but that kind of seems like the path that's being taken. There's going to be a bit of a security restructuring program as well. It's going to be led by OtterSec and Asymmetric Research.
So just for the sake of the length of today's video breakdown, I won't play the remaining portions of that. But nonetheless, right, it was just interesting having been in crypto for 10 years to now see a headline that USDT is the knight in shining armor. And the reason, again, why I'm bringing that to everybody's attention is just not to be skeptical, but, remember what the narratives were. And then now if they're trying to funnel everybody into USDT, and if it does end up being a rug pull or something happens, like just be cognizant, assess your risk, understand that anytime you put money in a stable coin or a crypto, that you could lose all of that money, right? So just assess your risk, I guess is what I'm trying to say. with that risk assessment in mind, stay the fuck away from this platform, you guys and gals. All right. I'm telling you all right now, this is 110% a scam. 110% a scam. And if I'm wrong, then this platform and whoever created it they need to get better, like straight up. Because I mean, this is just horrible. The reason why I'm bringing this up is because I had another individual reach out to me. Midwest posted this particular video breakdown in the chat yesterday. It's this guy here, Ito Farina, and like I said, I don't know this guy. I've never talked to him. I've never watched any of his videos. But when a community member in our community posts this stuff and then asks questions about it, this is a red flag. Now, to give this guy the benefit of the doubt, he's probably an idiot and doesn't actually know what he's promoting. To be completely fair, it's possible. Maybe he does, but I'm just trying to give him the benefit of the doubt. And maybe he's just blind and he's trying to make some money, right? Woohoo. We all live on this earth and we need money to survive. We can't blame him. With that being said, he also mentions here in this video that you do need to do your own due diligence and research on this platform before using his affiliation link and putting your own money into the platform, which the affiliation link he has right here in his bio. Don't click on this shit. He's just getting a freaking affiliation for you signing up. And that's all this platform is. This is a pyramid scheme to funnel money into the platform and drive liquidity to affiliates. And then the people on the back end of this are also making money. And then you're never going to be able to pull out your funds. Guarantee that's how this is going to go down. And in a couple of years, if I'm freaking wrong, then I'll eat my word and say I was. But I guarantee it is. So let me show you guys, just doing some of that due diligence, how easy it is to debunk that this is an absolute freaking horrible scam put together. Okay. And anybody with a brain that has been accumulating XRP would not touch this platform with a 10-foot pole. First off, a platform claiming that they are regulated, right, offering 20% APY on an XRP token, has no headlines from any mainstream telegraphed crypto platform anywhere. Not Cointelegraph, not Coin Bureau, not freaking the Daily Huddle. Like nowhere at all has there ever been an article written on this announcement. This is huge in XRP holders' eyes. As you guys heard from Marcus, what is his name? Hangfinger, or whatever the heck is Infinger, right? He said that DeFi on the XRPL is the biggest thing since the freaking XRPL. Okay, that's not coming from my personal opinion. That's coming from freaking a dude that works at Ripple. And you have 20%, a protocol here offering 20% APY. Come on, that's going to make headlines somewhere, and it doesn't. That's the first red flag that I took from this. Here, where it puts this regulation in everybody's face. Okay, so it says it's regulated because it has filings that are public to the SEC and the NSA or NASAA, right? First off, if you take these filings, you can obviously, of course, open them. You can see the NSA filing, you can see the SEC filing, and you go look at them, and you just use a little chat GBT. Anyone can file these, guys and gals. This does not make you or equal regulatory approval or clarity for your platform. Just because somebody goes and files these, anybody can go and file these. So the fact that they have these on their website with no follow through, did they get approved? Does this mean they have regulatory clarity? Where are those announcements at? There are none. It's just their filing. Okay, this just shows that they're trying to get people to believe that because of these filings, it gives them regulatory status, which it does not. And an uneducated DeFi enthusiast that comes here and is like, oh, regulated filings? Great, they're probably safe. No, anybody can do this. I could go and freaking file this for the SEC for CYPRX and then post my filing on the CYPRX website and say, look, I'm regulated because I filed with the SEC. No, that's not how this works, right? So that's exactly what they did here. That was a red flag for me. Then up here on their platform, they mentioned that they are KYC'd, right? So, excuse me, down here, let me rephrase that. If you scroll down here, all the way to the bottom, all right, down here, it says AML KYC policy, right? So you click on that, you come over here and you read a little bit about it, and it mentions how FortisX handles AYC or KYC AML compliance and how it's compliant with the regulation, right? So then you go back to the homepage. So it mentions that it's compliant with AML KYC, but then you come right back up here and you realize that to sign up for this platform, you actually don't have to KYC. You don't have to sign up with any credentials that are valid, right? You literally don't even have to sign up with the wallet. You just sign up with your email and then you can put your crypto on this platform. No, what the heck? Come on now. Anybody with the brain, guys and gals, So no KYC instant access, but then they mention in their documents that they're KYC AML compliant. That is another huge red flag. Okay, if they were AML KYC compliant, then you would have to KYC on this platform. Point in proof is if you go over to the soil farming pools, which is the first and the only regulated DeFi protocol on the XRPL as of time of recording this particular video breakdown, which has had confirmation from RippleX employees and Ripple themselves that they are regulated. You do have to KYC on the platform to earn yield on RLUSD and now upcoming XRP yield. So that was just another major red flag here. If you want to continue, just again going from scratch, you can come here and let's go to, I don't know, let's go to another random thing. Let's go to their about me. Let's see who's on the team. Actually, matter of fact, let's go here. Look at these announcements right here. It says current and planned integrations. I'm not going to do this for you guys to take the time. You can do it on your own. But if you look up any of these announcements here, look, these names, okay, into the block, sentiments, all these names, right? CoinGecko, Keiko, which is a huge institutional data provider. You would think that they would make an announcement working with this platform, right? Masari, none. If you go over to Google, just to show you guys, and you type in, I don't know, Fortis X, right? Let's just look it up. Fortis X, okay? And let's put Keiko announcement, right? Look at this. There's nothing. There's nothing. There's no announcements for Fortis X Keiko, right? And then you could do the same thing for any of these, like Alchemy, Chainstack, and for any of these partners that they say they have, just go look them up. I've already done it, so I know that you can. And none of these partners have announced. Look, CoinDesk is one of the biggest, influencer pages for crypto news. If you go look at CoinDesk, so look up Fortis X, look up CoinDesk, nothing, right? There's no CoinDesk announcement, none. It's just baloney. So just again, they have false announcements on their page because people won't come and won't go and search this. They'll just be like, oh, a Cointelegraph made an announcement and a partnership. Oh, let's use it. Right? No. Right? So be very cautious. The last thing that I'll show you guys is their founders. All right. So if you come here, go to their About Us, right? They claim that they've been around since 2018. Okay. And if you come down here, this is the head of protocol and product strategy, Clay Patterson. So you would think a guy, right? Clay Patterson, who's been in the game since 2018, right? And offers a protocol with 20% yield, would have been on some type of interview or some type of news headline or at some Ripple event or I don't know, just somewhere in the press, considering that this is the only platform on the internet right now in a regulated manner, according to their website, that offers 20% yield on XRP. You would think he would have interviews and would have some form of like, I don't know, maybe a LinkedIn. Let's go to LinkedIn, right? You'd think he'd have a LinkedIn profile. Let's look him up. Clay Patterson. We know Clay Patterson right here. Look. Clay Patterson. I don't know who this is. Chief Policy Officer at University of South Carolina, upstate. He has no LinkedIn profile. If you go to his LinkedIn profile link, which he has here, you can see this page does not exist. This dude is a ghost. He doesn't exist because he's not real, right? But people won't go and do the due diligence and click this stuff. Oh shit, look, they added a new business strategy officer. Look at that. Look at this guy right here. This is an AI generated picture, okay? This is a freaking AI dude. Looking at his LinkedIn profile, okay, you would think a guy on a protocol that offers 20% XRP would have some more credentials than an Upwork freelance worker. Okay? Come on now. Absolutely not. So just be cautious of this stuff. If you go back and you even just search this dude, Clay Patterson, he's nowhere to be found. Nowhere to be found. They have 4 YouTube videos on freaking their YouTube. Like, this is 110% a pyramid scheme. I would not be surprised if in the coming years, this gets absolutely rug pulled. And all of these influencers that are shelling this, hopefully it's that they just don't know any better. But God forbid if they do, this is a 110% a red flag scam. So I thought that I'd bring that back to everybody's attention, considering everything that's going on right now in the DeFi ecosystem with all these exploits. Protect your digital assets at all costs. That is why, in my personal opinion, if you're not operating on, compliant DeFi infrastructure right now, get your digital assets off those protocols and move to ones that are compliant. All right. So Soil, we know, is compliant. We know the loan protocol is compliant, right? There's a couple handful of some others out there, but just be cognizant and be aware out there and just take this serious, because over the next consecutive couple of years, like Alex Cutler said, like this other dude here, Chris Tyree said, we are going to see a massive restructuring and a shift from digital assets that we might have thought were going to survive, protocols that we thought were going to survive that in fact actually aren't, and we just need to be we need to have the ability to transform with the changing tides. All right. D'Angelo, I'll let you go ahead, but then that's all that I have for today. And I got to hop off here because it's still Sunday and I got some other stuff I got to do. But D'Angelo, go ahead, brother.